Investors are always on the lookout for stable, passive income. High dividend yields offer just that. A dividend is a portion of a company's earnings paid to shareholders. When this dividend is high relative to the stock price, it becomes attractive. High dividend yields can provide steady cash flow. Reinvesting dividends can lead to compound growth over time. In a low interest rate environment, dividend-paying stocks can offer better returns. They can also act as a cushion during market volatility. For retirees, this steady income stream is particularly appealing. Hidden gem stocks are lesser-known companies with high dividend yields that are not on everyone's radar. These stocks often belong to smaller or niche markets. They can offer the potential for significant returns along with steady income. The key is to identify these opportunities before they become widely recognized. Many hidden gem stocks are found outside the large-cap indices. They might be in emerging industries or overlooked sectors. These companies may have strong fundamentals, but lack the visibility of more prominent firms. This lack of attention can sometimes lead to undervaluation, presenting a buying opportunity. Investing in hidden gems requires thorough research. Investors must look beyond the popular stocks and dig deeper into financial reports and market trends. This process can uncover companies that are consistently profitable and well-managed, but not yet recognized by the broader market. While hidden gem stocks can be very rewarding, they also come with risks. These stocks might be more volatile due to lower trading volumes or lack of analyst coverage. However, for the diligent investor, the potential rewards can outweigh these risks, especially when combined with high dividend yields. Identifying high dividend yield stocks requires specific criteria and tools. One key criterion is the dividend yield itself. A good benchmark is a yield above the market average, typically around 3 to 4%. However, yields of 7 to 10% can be especially attractive if they are sustainable. Another important factor is the payout ratio. This measures the proportion of earnings paid out as dividends. A payout ratio below 60% is generally considered healthy. It indicates that the company retains enough earnings for growth and can maintain its dividend payments. Investors should also look at the company's earnings growth. Consistent earnings growth can support ongoing dividend payments and potential increases. Additionally, the company's debt levels should be manageable. High debt can strain cash flow and jeopardize dividend payments. Several tools can aid in this research. Financial news websites, stock screeners, and investment platforms often provide comprehensive data on dividend yields, payout ratios, and earnings growth. Utilizing these tools can help investors filter through thousands of stocks to find those that meet their criteria. Finding high dividend yield hidden gems involves a systematic approach. Here's a step-by-step guide to get you started. First, use a stock screener to filter for stocks with dividend yields of 7 to 10%. Set additional filters for payout ratios below 60% and positive earnings growth. Next, narrow down your list by examining the industry and market sector. Look for sectors that have stable demand or are growing. Avoid industries that are highly cyclical or facing long-term decline. This helps to ensure that the company's earnings and dividends are sustainable. Once you have a short list, dive into the financial statements of these companies. Review the income statement, balance sheet, and cash flow statement. Look for consistent revenue and profit growth, manageable debt levels, and sufficient cash flow to cover dividends. Pay special attention to any red flags such as declining earnings or increasing debt. Finally, research the company's management and competitive position. Strong leadership and a competitive edge in the market can be indicators of a company's long-term viability. Check for news articles, analyst reports, and other sources to get a comprehensive view of the company's prospects. Real-time examples of researching and analyzing high-dividend stocks. Let's delve into a real-time example. Consider ABC Realty Trust, REIT, with a dividend yield of 8%. Use a stock screener to filter REITs with yields above 7%. ABC Realty Trust appears on the list. Examine its payout ratio, which is 55%. This indicates a reasonable dividend payout. Look at its earnings growth. Over 5 years, it shows steady revenue and profit growth. Review the financial statements. The income statement shows consistent revenue growth. The balance sheet reveals manageable debt levels. The cash flow statement indicates strong cash generation. Research the company's market position and management. ABC Realty Trust has a strong market presence and a seasoned management team. This analysis suggests ABC Realty Trust is a viable high dividend yield gem. Expert tips on risk mitigation, diversification, and maximizing returns. Investing in high dividend yield stocks comes with risks. To mitigate these risks, diversification is key. Spread your investments across various sectors and industries. This reduces the impact of any single stock's poor performance on your overall portfolio. Consider the company's dividend history. Companies with a track record of consistent or growing dividends are generally more reliable. Also, focus on the quality of earnings. Sustainable earnings support sustainable dividends. Avoid companies with erratic earnings patterns. Another tip is to reinvest your dividends. This can significantly enhance your returns through the power of compounding. Many brokerage platforms offer automatic dividend reinvestment plans, or DRIPs. These plans allow you to reinvest dividends without paying additional fees. Lastly, stay informed. Regularly review your holdings and keep up with market news and trends. This helps you make timely decisions and adjust your portfolio as needed. Remember, the goal is not just to chase high yields, but to find quality investments that offer both income and growth potential. Overcoming challenges with high dividend yield stocks. High dividend yield stocks come with their own set of challenges. Market volatility is a significant concern. Stock prices can fluctuate, affecting the overall value of your investment. To address this, focus on the long-term potential of the company rather than short-term price movements. Dividend cuts are another risk. Companies may reduce or eliminate dividends if they face financial difficulties. To mitigate this, invest in companies with strong financial health and a history of maintaining or growing dividends. Regularly reviewing financial statements can help spot potential issues early. Economic downturns can also impact dividend-paying stocks. During recessions, companies might struggle to maintain profits, leading to dividend cuts. Diversifying your portfolio to include defensive sectors such as utilities and consumer staples can provide stability during economic downturns. Lastly, consider the risk of overconcentration. Relying too heavily on high dividend yield stocks can expose you to sector-specific risks. Ensure your portfolio is well-balanced and includes a mix of growth and income-focused investments. This helps spread risk and provides a more stable return. The importance of due diligence and long-term strategies. In summary, investing in high dividend yield stocks can be an excellent way to generate passive income. However, it requires thorough research and due diligence. Identifying hidden gem stocks involves looking beyond the obvious and digging deeper into financials and market trends. Using criteria such as dividend yield, payout ratio, and earnings growth can help filter out the best candidates. Tools like stock screeners and financial analysis platforms are invaluable in this process. A systematic approach to researching and evaluating these stocks is essential. Moreover, it is crucial to apply risk mitigation strategies. Diversifying your portfolio, focusing on quality earnings, and reinvesting dividends can maximize returns. Staying informed and regularly reviewing your investments ensures you can make timely adjustments. Finally, patience and a long-term perspective are vital. Market volatility and economic downturns are inevitable, but well-chosen high-dividend yield stocks can provide steady income and growth over time. Consistent due diligence and strategic planning can make a significant difference. Call to action. Begin your research and share your findings. Now that you understand the potential of high dividend yield stocks, it's time to take action. Start by using stock screeners to identify potential hidden gems. Apply the criteria and steps outlined in this guide to evaluate these stocks thoroughly. Remember to diversify and focus on quality. Engage with other investors and share your findings. Online forums, investment clubs, and social media platforms are great places to discuss potential investments and gain additional insights. Collaboration can help uncover opportunities you might have missed. Take advantage of available tools and resources. Many brokerage platforms offer educational resources and research tools. Use these to enhance your knowledge and refine your investment strategy. The more informed you are, the better your investment decisions will be. Finally, remember that investing is a journey. Stay patient, keep learning, and adapt to changing market conditions. High dividend yield stocks can be a valuable part of your investment portfolio, providing both income and growth. Start your research today and take the first step towards financial independence.